Breaking news. A wave of optimism surges through Wall Street as markets open to an atmosphere charged with relief and renewed investor confidence. Traders and analysts alike are responding positively to what many are calling a strategic shift in the U.S. administration's approach to its economic conflict with China. After months of uncertainty and heightened tariffs, President Donald Trump has signaled a softer tone in trade negotiations, and investors are cheering the potential thaw in what had become an increasingly hostile standoff. In a move that sent futures soaring ahead of the market's opening bell, President Trump indicated that the exorbitantly high tariffs, once reaching levels as steep as a 145%, may soon be reduced. Though not expected to drop to zero, even a partial rollback is a welcome change. This shift, compounded by assurances that Federal Reserve Chair Jerome Powell will remain in his role, marks a dramatic departure from earlier threats and signals an easing of tensions on two of the most anxiety-inducing issues for global investors. Treasury Secretary Scott Bessent reinforced this evolving narrative, speaking with optimism about the prospects of de-escalation. In a private briefing to investors, Bessent described the trade war as unsustainable, hinting strongly that the Trump administration recognizes the long-term damage of continued economic confrontation with China. Investors were quick to respond, pushing the market higher in pre-market trading and setting the stage for a strong day. CNN's Vanessa Yurkovich reports live from the floor of the New York Stock Exchange, noting that traders were visibly more upbeat than in recent weeks. There's a collective sigh of relief, she explains. The trade war with China and the uncertainty around Jerome Powell's future were the two biggest concerns. Today, both of those seem to be heading in a more stable direction. Indeed, the opening bell rang out to a chorus of applause and smiles on Wall Street, where futures had been climbing all morning. The rally, which began yesterday, continued its upward trajectory as investors embraced the possibility of a less combative economic environment. The president's remarks emphasized that while tariffs would not be entirely eliminated, they would be adjusted to more manageable levels, far from the peak that spooked global markets. His softer tone was a clear effort to stabilize investor confidence and avoid further volatility. Equally significant was the president's declaration that he has no plans to dismiss Federal Reserve Chair Jerome Powell. The speculation surrounding Powell's potential removal had created serious anxiety among economists, traders, and global partners alike, who feared it would undermine the independence of the central bank. But not every company is enjoying a moment of triumph. Tesla, the electric vehicle giant led by Elon Musk, reported a staggering 71% drop in net profits year over year, raising eyebrows even amid broader market enthusiasm. Musk, whose recent role in government as head of the Department of Government Efficiency pulled him away from Tesla, appeared to recognize the urgency of returning to his core mission. During Tesla's earnings call, Musk confirmed plans to reallocate more of his time back to the company. "Starting next month, I'll be dedicating far more of my time to Tesla," he said. "The major work of establishing the department is complete, and now it's time to refocus on what matters most: innovation, efficiency, and delivery." This announcement had an immediate impact. Despite disappointing earnings, Tesla shares climbed over 7% in pre-market trading, buoyed by investor optimism about Musk's return. Analysts described this as a pivotal moment. Dan Ives of Wedbush Securities called it the beginning of a new chapter for Tesla, where robotics and autonomous systems would take center stage. Ives elaborated, "Musk is Tesla and Tesla is Musk. His return to full-time leadership is absolutely essential to moving the company forward. The timing couldn't be more critical." The sentiment was echoed by traders who see Tesla not just as a car manufacturer, but as a technological frontier. Musk's leadership, they argue, is the glue holding the company's ambitious vision together. Meanwhile, Secretary Bessent is expected to address a global economic summit later today, where his comments will likely reinforce his earlier statements. His candor about the trade war being unsustainable has already reverberated across financial centers worldwide. President Trump's recent remarks have also sparked a firestorm on social media, especially in China, where the hashtag #TrumpChickenedOut is trending with millions of views. While the president downplays this shift as simple pragmatism, many observers see it as a response to mounting economic pressure. CNN's Zain Asher weighed in, describing the shift as massive and noting that even the administration's usual firebrands, like Peter Navarro, have been notably quiet. Markets don't just want talk, Asher said. They want to see progress, real concrete steps toward an agreement. This rhetoric is a good start, but action must follow. For Trump, who has long maintained a tough-on-China stance, this pivot reflects a growing realization. Financial markets wield a power few politicians can ignore. While he often disregards critics and political rivals, Trump appears far more sensitive to the market's verdict. Panicked equities, bond sell-offs, and currency fluctuations present risks that even the most combative presidents cannot dismiss. In a remarkable contrast to his earlier threats, Trump spoke warmly of Chinese President Xi Jinping during his latest remarks. "I'm not going to play hardball with Xi," Trump said. "We're going to be nice. They'll be nice. Let's see what happens." Such language is a stark departure from the aggressive posturing that characterized trade talks for much of the last 2 years. Analysts suggest this is a clear attempt to reset the tone ahead of formal negotiations. Of course, the long-term success of any trade deal will depend on execution, not just diplomacy. Investors are watching closely to see whether the U.S. and China can move beyond sound bites and into substantive discussions. At the same time, Trump's renewed support for Fed Chair Powell signals a retreat from another front of conflict. His earlier threats to replace Powell were met with fierce backlash from economists who warned it would damage the credibility of the Federal Reserve. The mere suggestion caused a dip in the dollar's value and led to increased market turbulence. By pulling back from this position, Trump not only restores some sense of normalcy, but also acknowledges the limits of executive power and economic policy. Looking ahead, the challenge will be sustaining this momentum. The administration has taken the first steps toward mending market confidence, but the road to resolution is long. Investors will demand not just reassurances, but real outcomes. Tariffs rolled back, deals signed, and economic relationships stabilized. Today, however, is a day for optimism. Wall Street is rallying, and for the first time in weeks, there's a sense that the clouds may be lifting. Don't miss future updates as we continue to track this evolving story and its impact on the global economy. Be sure to like, comment, and subscribe to my channel for the latest breaking news and in-depth analysis.